Markets reverse losses in the last hour of trade to end with minor gains. The Sensex adds over 100 points and the Nifty reclaims 10,900. But midcaps underperform with the index slipping almost 1%.
Titan rallies over 3% after a strong third quarter showing. Management says that the company gained market share in an otherwise muted jewelry industry.
Rating agencies downgrade DHFL even as the company sells its subsidiary Aadhar Housing for 2,700 crore rupees. The stock recovers after the management says it will bring in a strategic investor maybe in the next 3 months.
Shares of Arcom tank as the company decides to opt for the insolvency proceedings after failing to sell assets to repay lenders. Other stocks from the Anil Ambani group also see severe selling pressure.
Two-wheeler stocks like Hero Motor and TVS come under pressure after a weak set of auto sales data for the month of January. Bajaj Auto surprises with a good set of numbers. Sales grow 15% year-on-year. Well, those were the top 5 headlines from Dalal Street on a day when the markets seemed to be tanking in the first hour of trade and then found their nerve in the last hour of trade. Hello and welcome to Markets Today, Talk Back, the show where we will tell you everything that happened in those 6 hours of trading in 5 headlines. I'm Lata Venkatesh. With me, my colleague, Prashant Nair.
Lata, hi. I mean, extremely narrow kind of pullback and advances to declines ratio very much skewed in favor of declines. 3:1 in favor of declines. So, Lata, somebody said that except Ritik, everything else is down in the dumps. And I said, what is Ritik? Apparently, it stands for HDFC Bank, Reliance,
Infosys,
TCS, and so and so.
Okay.
I mean, so
Kotak, I
thought it was a good way to put it. But I mean, it's the truth. So very narrow, extremely narrow. We will talk about that over the next 30 minutes. We will talk about what moved, why. We'll tell you the top stories. Our guests will take your questions. Deepan Mehta is with us here in our studios, member BSE NSE. On the charts, we have our technical expert, Ashwini Gujral. Gentlemen, thanks very much for being with us here on the show. But before we come to you, let's take a quick look at what happened right from the word go this morning at 9. Lata.
Really, you've stolen the thunder by that superb, acronym, Ritik. But just to add a little bit to how the market started off, it was, if you can call it, a debt story that pulled the market apart. First, it was the government borrowing. Already on Friday, you had seen yields go up. And as the market ruminated the numbers over the weekend, you saw bond yields go even further lower by another 4 or 5 basis points. So the new 10-year went to 7.4%, the old 10-year went to 7.65%. But basically, the impact is obviously felt on those who are borrowing from the wholesale debt market. And there the situation was really bad. It was already bad. You didn't want the yields to go any higher. The position of, all the companies, Arcom, Z, DHFL, all those stories only got worse over the weekend. The kind of news that we got from leveraged companies or, companies with split shares only got worse over the weekend. And you could see that in the way the stock market moved. So I'm not surprised at all that the breadth of the market is so pathetic because there are so many beleaguered companies and there isn't much hope for them. If the index is looking strong, it is on the strength of really a handful of stocks. But since you just stole the thunder with that list of stocks that are doing well, maybe we want to start with the positives.
I mean, absolutely. So I'll just name maybe not all of those stocks, but a few, because it was just a few bunch which really pulled the indices up the way we saw towards close. Titan, RIL, ONGC, Eicher, Bajaj, Kotak, TCS. Were the gainers and the only noticeable gainers in the Nifty on your screen. The list of losers, even within the Nifty, actually was far larger than the number of stocks on the Nifty which actually were up. So, Indiabulls Housing was down, Hindalco was down, Yes Bank is down at 180, HPCL was lower, Power Grid, Z. I mean, so, and I could go on, but these are the big ones. As you said, tough day for the highly levered groups. So Reliance Capital, Reliance Infrastructure, Reliance Power, Reliance Communication, the entire ADAC pack under pressure. Adani Enterprises, Adani Power, Adani Green, that is another pack which was scathed. I mean, the one which actually stood out was Adani Ports, which was down just 1%. The others were down a lot more. HEG, Graphite were other names which were down sharply on large volumes. Edelweiss was down about 6%. Berger Paints, Jain Irrigation, Walkhard I found them noteworthy as well, with large volumes and big declines. Broader gains, DHFL, bounced a little bit, 4% or so by close after that tremendous amount of loss it's seen in the last 1 month or so. Jubilant Food has picked up 2.5%, and Divi's was up on large volumes. It was, I think, up about 5% or so. Lata.
Okay, I think in the mid-cap space, 15 out of 100 stocks in the BSE 100 were in the red. So that's telling you something about the breadth of the market. Well, Ashwini, first, what did you make of the day's trade? What's a Nifty trade or a Nifty Bank trade hereafter?
Well, it remains fairly range bound, but it's now clear that anything that's leverage is debt ridden. It will, these stocks will keep on moving lower, because whether there is a problem or no problem, the market will sell first and ask questions later. Because once it's out, you can't get out of these stocks. The other thing is that corporate governance premium is coming in. So anything that is, kind of haloed ethical management, low debt, most of these large caps don't have debt. These stocks are moving up. On mid caps, consumption is moving up. So even non-index stocks, non-F&O stocks, if you see things like Aarti Industries, etc., Bata, Jubilant, Pidilite, you name them, and they tend to move higher. So my sense is this sort of consumption, 3 or 4 of these large cap stocks, Kotak, HDFC Bank, you can make a nice portfolio which could outperform till the elections. But overall, 80% of the stocks going down means that the market is not healthy. Retail is probably dead and gone. So that way, very narrow market, and narrow markets are often susceptible to corrections and are unable to cross new highs, very easily.
Okay, so that sets us up nicely to take the conversation forward, and we move on to the second story, the second headline of the day. The top gainer actually on the index today was Titan. The stock rallied over 3%. This is on the back of a robust set of third quarter numbers. In fact, across the board, brokerage houses have raised their price targets post the results. Mangalam, my colleague, is standing by to decode the big numbers and the important highlights. Mangalam, over to you.
Titan gained in today's trading session, among the top Nifty gainers after posting what was a glittering quarter. Nearly 35% growth on the company's top line, comparing with our poll of around 27%. The operational performance, if you adjust the EBITDA for the 70 crore provisioning that they had made for their exposure to IL&FS, would be much higher than our expectations of 590 crores as well. And on the back of that, the net profit at 416 crore, above a CNBC TV 18 poll as well. What led the performance from the front was the company's jewellery division. 35% growth seen in the jewellery division's revenue, as well as EBIT performance was sanguine, with a 250 basis points expansion out there. The brokerages were pretty happy with this performance as well. Edelweiss raised their target multiple on Titan from 50 to 55 times, and EPS revisions made on Titan by both Motilal Oswal as well as CLSA. The management told CNBC TV 18 that while the jewellery industry was muted, it was Titan's efforts to gain market share which reflected in their quarterly performance.
Okay, that and more was what the Titan management shared with us. Let's just listen in to what they had to say.
The jewellery industry itself over the last year plus has not been growing, or rather the growth, if at all, has been very, very muted. There have been quarters where I think there has been a decline. So even as that has happened, it's amazing that from a market share gain perspective, Titan has done quite well. The gold exchange program is something which has been quite a revelation over the last a year and a half too, where we have taken our share of exchange gold from less than 20% 2 years back to over 40% now.
Okay, that is the Titan CFO talking about what he makes of the business, the numbers. Sushant Goyal has written in to us from Delhi. He's got a question on Titan. He's holding 100 shares of the stock, which he purchased at 940 rupees a piece. He's a long-term investor and wants to know if he should hold or sell. Deepan, first you.
It's a no-brainer. After seeing such a result, there's no one who would want to sell Titan. I think you've covered Titan pretty well in terms of what the result highlights are. Nothing much to add except that the valuation is on the higher side. So if it comes down in terms of cheaper valuation, you could perhaps average more of Titan. Otherwise, I think hold on at least next 2-3 years looks very bright for the company.
At least he has got it at 900 rupees. So he's already sitting on a bit. But as you say, if you're lucky enough to get it cheaper, you should only average it lower.
Can we get a view from Ashwini as well? Ashwini, any thoughts? Titan, what would you tell the viewer?
Well, given that this is a good time for consumption, he can hold on, although we should remember that he hasn't really killed it with the price. So it could come back to its buy price, etc. But overall, if you see, we're looking at 1250, 1300 type of move. If it comes off, add to his position, because this is one of the few stocks which are at all-time highs and just broken out, so there should be more upside.
Fair point. It did go to 750 several times in the past year, or in fact in the past year it's gone at least 2-3 times below the 800 mark. The third headline for the day: DHFL stock nosedived 13%, then bounced back from the day's low. This fall came after rating agencies downgraded the company. Separately, the company has also sold its subsidiary Aadhar Housing in a deal worth 2,700 crore rupees. The stock picked up steam after the company's management said in a conference call that a strategic partner should be selected soon, probably within 3 months. Let's listen in to Chairman and Managing Director Kapil Wadhawan.
It is alleged that the loans have been sanctioned and disbursed to non-existent slum rehabilitation projects. This statement is completely false. The complaint is riddled with false allegation and false statements. It alleges setting up and using of shell companies. It is, however, relevant to note that not a single one of these companies was designated or described as a shell company by the Ministry of Corporate Affairs, Government of India, when it issued its list of shell companies in the year 2017. The complaint also suggests concocted loans given to various entities which are perpetually outstanding. In fact, many of those loans of an aggregate value of rupees 2,250 crores have already been repaid. We were surprised and shocked that the rating agencies have announced a re-rating of DHFL's debt in view of recent events. The re-rating is not a reflection of any deterioration in our asset credit quality or on our liquidity. It is more in response to the decline in the share price and the rise in the bond yields, which is what is observed by the rating agency in their rationale.
Okay, that is Kapil Wadhawan at DHFL. We've got a question. Girish J has written in with via an SMS with a question on DHFL. He wants to buy 250 shares of the company and wants to know whether this is the right time to do so. So let's pose this question from Girish to Ashwini. Any thoughts, Ashwini?
Why do you want to buy it? See, it's very obvious there are loads of problems here. And in a financial company, you have building and finally tables and chairs. If you have NPAs with you and if you can't pay back people, the company is as good as over. So if you want to buy financials, buy into stuff like HDFC Bank, Kotak, HDFC, maybe some of these corporate lenders also, Axis Bank, ICICI Bank. This is not the time to dabble into second rung NBFCs or maybe Bajaj Finance.
Okay, for you, Bajaj Finance. So what about you, Deepan? What's the advice?
So I think it's not an investment proposition, it's more of a gamble. And if it turns out right, then you may make double your money or so. But if not, you would lose your entire capital. So that's the equation. And one doesn't really know which way the coin will flip.
Will flip, yeah.
So depending upon the temperament and the actual objective of the investor, he can take a call. If he's an investor, clearly avoid. If he's a punter, then why not?
Yeah.
You could get 20-30%, maybe double also. Yeah.
All right. So be very clear that you're getting into a risky bet. With that advice, we go into a break, but we're going to leave you with some more market opinion we got from Ruchir Sharma, the founder and fund manager of... oh, sorry, this is not Ruchir Sharma. We have got advice from actually Samir Arora of Helios Capital. We'll just listen to what he had to tell us earlier in the day, and we are back with more questions and answers that we will get from our guests.
I'm feeling okay about the market, but not good. First of all, Indian market is really underperforming Asia and emerging markets, which itself is a bit of a drag. It is actually, in real terms, already a bear market or whatever you want to call it, because other than these 3-4 stocks, which is Reliance, TCS, Infosys, and maybe 1 or 2 more, basically the rest of the market is down at least 3 to 4% more than what the index shows.
We have covered 3 of the top 5 stories. We move on to the 4th headline of the day. Another stock that was in focus in today's trading session was Reliance Communications. The stock ended the day down around 35%. This is on the company's decision to opt for insolvency proceedings after it has failed to sell assets to repay lenders. Other stocks from the Anil Ambani group also saw severe selling pressure. My colleague Kritika Saxena caught up with Reliance Communications Executive Director Puneet Garg. Here's what he had to say about the company's decision. Listen in.
If I am saying that, we would be through 66% and we would, we have 90% plus in all the cases. Obviously, all the majority lenders are with us, and they are the one who have run the whole process. And going forward as well, I see that they would play a major role in terms of reaching this consensus. They have always supported us, even in the different legal forums as well, to ensure that the resolution is completed shortly. We have had no differences between Indian lender and foreign lenders. When it has come to agree on resolution plan or giving the consents, they both have been coming forward, and there has been absolute unity among themselves.
Okay, now comes the tough question from Gautam Mathur of Delhi. He has Reliance Communications shares, 180 of them, which he bought at 18 rupees a piece. Okay, he's a long-term investor. He says wants to know if he should hold or sell. You have a view?
When it goes into NCLT, it is difficult to call what happens to minority shareholders. But I guess just hold on to it. You may get certain trading spikes closer to 10, 11 rupees or so. Be a good idea to just exit out of the stock. I think it's full of uncertainty as far as RCom is concerned.
Ashwini, your thoughts?
Well, sell and have a burger or a pizza, because it's going to go down to zero. So that way, whatever you can salvage, you should, and then put in some more money and maybe look at some better stocks.
The rule clearly is that if in an NCLT you don't return all the money to the lenders, then equity value goes to zero. So it depends on what price you get for some fairly good assets that they have, especially real estate.
Okay, well, we move on to the last story of the day. Two-wheeler stocks like Hero MotoCorp and TVS were under pressure in today's trading session. This after they reported a weak set of sales numbers for the month of January. The only silver lining was Bajaj, which reported a growth of 15%. Sonia is here with all of the data. Sonia, it's not really been all that good a month for two-wheelers especially, isn't it?
Well, January was a weak month for the two-wheeler sector. The only outlier was Bajaj Auto. Stripped of that, most companies' numbers were below what the street was estimating. Two cases in point was TVS Motor and Hero MotoCorp. Now, for TVS Motor, single-digit growth is what it saw. Total sales were up just 4%, while scooter sales actually fell in January, down about 0.2%. The most disappointing was Hero MotoCorp. It saw a fall of 9% in its sales this time, and the management said that the weak sentiment from the previous quarter saw a spillover effect into January, and the industry is witnessing lower retail offtake because of the credit crunch as well as the higher insurance costs. Although they do mention that customer sentiment has picked up in the last 2 weeks. Eicher Motors Royal Enfield, the numbers were better than expected, but it was still a fall of 7% year-on-year that Eicher Motors saw. The only outlier, as I mentioned, was Bajaj Auto. The total sales growth came in at 15% better than expected. Export sales up 16% and domestic sales up 14%. And the management told CNBC TV 18 that this is a run rate that they can maintain in the next month.
All right. That's good to hear. At least you end with a bang. But we have questions. Bhavya Gugoi has written to us with a question on Ashok Leyland. He has 300 shares of the stock, which he bought at 126 rupees.
82 today, Lata.
Okay, so sitting in a bit of losses, Deepan, what should he do?
I think way to ride out this weak spell in auto industry. And if the economy consumption is going to go up, then commercial vehicles sales also should pick up. And Ashok Leyland is going to be the first off the block. I think they have got their strategy and the business pretty well cut out for them. So I think that maybe not 120, but you could get 15-20% from these levels or so over the next few months or so, assuming that commercial vehicle sales pick up. So I don't think I want to sell Ashok Leyland at this price at least.
Okay. Basically, what's your best auto stock?
Well, I think it's best to avoid the industry at this point of time. Let's wait for the monthly numbers to improve. After they improve, you may see the stock spike up by 5-10% or so. But the risk-reward ratio will favor you at that point of time than buying just now.
All right. Well, gentlemen, thank you very much for joining us with all your answers to our viewer questions.
Well, it's a wrap on this edition of Markets Today Talk Back from Lata, me, everyone on the team. Thank you very much for staying with us. More coming up on the other side.